Ladies and gentlemen, good day and welcome to Regaal Resources Ltd Q1FY27 earnings conference call hosted by Arihant Capital Markets Ltd. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Dipali Kumari from Arihant Capital Markets Ltd. Thank you, and over to you.
Thank you. Hello and good morning to everyone. On behalf of Arihant Capital Markets Ltd, I thank you all for joining into the Q1FY27 earnings conference call of Regaal Resources Ltd. Today from the management we have Mr. Anil Kishore Puria, Chairman and Managing Director, Mr. Karan Kishore Puria, Whole-Time Director, and Mr. Saket Chatterjee, Chief Financial Officer. So without any further delay, I will hand over the call to the management for their opening remarks. Over to you, Anil, sir.
Thank you, Dipali, and good morning to all the participants. Before I hand over the call to Mr. Anil Kishore Puria for his opening remarks, I would like to draw your attention to the safe harbor statement included in the earnings presentation. I request all the participants to kindly review the same and have a good look at it prior to the commencement of the Q&A session. Thank you, and over to you, Mr. Kishore Puria.
Thank you. Good afternoon, everyone, and thank you for joining us for the Regaal Resources earnings call for the first quarter of FY27. Quarter 1 FY27 marks an important inflection point in Regaal's growth journey. During the quarter, we completed a major phase of capacity commissioning and have now transitioned into a phase focused on ramping up utilization, scaling volumes, and capturing greater value from expanded manufacturing capabilities. The centerpiece of this phase was the commissioning on 26 May 2026 of a doubling of a crushing capacity from 825 metric ton per day to 1650 metric ton per day, alongside a new liquid glucose facility of 180 tons per day, a maltodextrin powder facility of 50 metric tons per day, and expansion of a captive cogeneration power plant from 7.1 megawatt to 15.8 megawatt. Together, these investments have established Regaal as the largest maize wet milling facility in Eastern India. Importantly, this expansion represents far more than an increase in tonnage. It strengthens our ability to capture value across the maize processing chain, broadens our product portfolio, and allows us to serve a wider range of applications and customers. Against this, we are pleased to report a strong start to FY27. Operating income from the quarter stood at 202 crores. Value added grew 30.3% year-on-year to 80.53 crores, with value added margin expanded to 39.8% from 25.1% in quarter, driven by decisive shift towards higher margin manufacturing-led revenue. We also continue to deepen our international footprint. Contribution from exports more than doubled to 10.4% in quarter 1 27 from 4.9% in quarter 1 26, reflecting growing acceptance of our products across international markets. With our expanded capacity and enlarged product, meaningful headroom to enter new geographies, deepen existing relationships, and build a more geographically diverse revenue base. Looking ahead, our focus is on further strengthening and diversifying our value-added product portfolio. During FY27, we plan to enter high-value derivatives, including dextrose and hydrates, dextrose monohydrate and hydrol, while expanding beyond our existing dextrine edible starch range into specialized modified starches such as cationic starch, carboxymethyl starch, pre-gel starch, and spray starch. In parallel, we are building out the supporting infrastructure for this growth with an additional 40,000 tons of storage across two new silos, a 50,000 square feet waste godown and a 1.6 megawatt methane gas-based power plant. With the major investment cycle substantially behind us, our attention is firmly on translating this enhanced capacity into higher utilization, a richer product mix, stronger cash flows, and sustainable long-term value for all our stakeholders. With that, I would like to hand over the floor to Mr. Shekhar Chatterjee, our CFO, to take us through the financial performance for the quarter.
Thank you, Anil sir, and very good morning. The Q1FY27 was a quarter of transition. The operating income for the quarter stood at 202.15 crores, lower by 18% year-on-year on account of a deliberate reduction in low-margin trading activity. Contribution from trading fell to 3.3% in Q1FY27 from 19.5% in Q1FY26, which resulted in an improvement in our profitability, with value added growing 30.3% year-on-year to 80.53 crores and value add margin expanding by 1,477 basis points to 39.8%. This improvement flowed through to profitability. The operating EBITDA rose 26.6% year-on-year to 30.98 crore, with EBITDA margin expanding 540 basis points to 15.3%. The profit after tax grew 47% year-on-year to 13.33 crore, and PAT margin improved 291 basis points to 6.6%. Operationally, maize cutting rose to 69,689 metric ton from 64,770 metric ton in Q1 FY26. The capacity utilization of 71.4% for the quarter should be viewed in the context of commissioning and integration of the doubled capacity. Integrating the expanded plant required planned shutdown days during the quarter, which temporarily lowered utilization. With major commissioning and integration now complete, we expect utilization to improve progressively from Q2 FY27 as incremental volumes contribute more meaningfully to revenue. Our working capital position reflects the scale and timing of our expansion. The cash conversion cycle stood at 130 days, driven largely by higher inventory levels built to support the expanded 1650 metric ton per day capacity. As the incremental capacity was commissioned only towards the later part of the quarter, the corresponding revenue contribution had not yet fully flowed through, leaving inventory elevated relative to the current revenue base. We expect inventory days to progressively normalize as utilization ramps up and the higher capacity translate into incremental volumes and revenue in the coming quarters. It is also important to note that inventory days are seasonally higher during Q1 and Q2 as we procure maize in advance for future quarter requirements. This seasonal effect is more pronounced this year given the significantly higher crushing capacity and the larger volumes that we expect to process in the coming quarters. On the balance sheet, the net debt stood at 735.32 crore, reflecting the funding of our expansion program as well as seasonal procurement of raw material. Importantly, all debt raised towards the new capex qualifies for interest subvention under Bihar Industrial Investment Promotion Policy, meaningfully containing our effective cost of borrowing and supporting the economics of the expansion. Of the total project outlay of approximately 664 crore, around 552 crore had been incurred as of 30th June to 2026, with the major phase of capex cycle now substantially behind us. As the expanded capacity enters their ramp-up phase, we expect free cash flow generation to strengthen, enabling greater reliance on internal accruals and supporting a progressive reduction in leverage. In essence, we are now transitioning from CapEx-led phase to a phase of cash generation and deleveraging, supporting our expanded capacity, stronger product mix, improving operating leverage, and disciplined capital allocation. This provides us with a strong foundation to scale the business while progressively strengthening the balance sheet. With that, I would like to open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while a question queue assembles. The first question is from the line of Shivam Gupta from Trinitra Asset Managers. Please go ahead.
Hi, sir. Thank you for the opportunity. I want to know, as Kishanganj capacity is at 1,650 tons, what utilization are we running at right now, and by when we see us reaching a comfortable run rate on these new lines?
At the moment, full utilization, because our plant started, the expanded plant started only in June first week. We recorded on 26th May, but we started about first, 2nd of June new operations. But of course, we are already seeing better the ramp up and the utilization is on the increase, and in further days we will go up quite expecting, because our earlier experience has been showing that we have done a very good utilization. So I'm hopeful with that within this year we will be reaching maximum.
Right. Can you give us a specific number?
Specific numbers are last year we did about 265,700 some odd ton crushing for the entire year. This year, realistic plan which we have done.
Your voice is breaking.
Hello?
No, there is some noise which is coming. Now it is stopped, but again it started coming. I don't know why it is coming.
Sir, I'll connect you again. Yeah,
please do that. Yeah, please do that.
Yes, sir. I'll connect you again.
बरसात में ना लैंडलाइन खराब हो जाता.
The management line has been connected.
Yes. The question was on something about the expansion, about the capacity. So last year we did a crushing for 265,000 tons the entire year. This year we are expecting that the crushing will go up above 4 lakh tons in the entire year.
Okay, sir. On follow-up on this, like new capacity, how much is actually going towards the value-added, like liquid glucose and maltodextrin versus paint scale? Just trying to understand.
Last year we had about 3% of our entire turnover as value-added products. This year we are expecting it to go up to 20-22% of our entire turnover as value-added products, including liquid glucose, is what you said, investments.
And like Q1 profit jump around 47% year-on-year. How much it was because of raw material cost, or it was due to operating leverages?
I would give this that it was majorly towards operating leverages only. Raw material cost is sometimes lower, sometimes higher, of course. But if you compare from the last year, I would say that it is basically because of operating leverages.
Okay. And Gujarat Ambuja.
If you compare,
there's another point. Just hold on.
If you compare to last year there was about a trading activity of about 19% of the turnover of the first quarter. This year it has dropped to 3%. So the margins in trading activity, which everybody knows, is much more lower than the manufacturing margin. So that was one of the major reasons too.
Okay, sir. And one last, like Gujarat Ambuja and Santar also is adding specialty star capacity. How are you thinking about pricing power over the years, over the next years?
So Gujarat Ambuja is always on constant growth. And we also are there. We have also expanded our capacity from 180 tons to 825 tons. We have never faced a challenge for selling at all. And for this also, we have increased our export base, which is there in the financials, from 5% to 10%. And we are opening new markets all across South and West to sell our products. So that should not be a challenge.
Okay, sir. That's it from my side. Thank you.
Thanks.
Thank you. The next question is from the line of Divakar from Prudent Equity. Please go ahead.
Good morning. So my question is on the EBITDA pattern. So this quarter our EBITDA pattern was 4450, and for FY26 we did around EBITDA pattern of 4742. So what is the sustainable EBITDA pattern you are looking for FY27?
Sustainable at the moment, I cannot tell you because we are in the at the time of transition, and that's a big transition from doubling our capacity, doubling our turnover and stuff. But of course, I don't it will be and this basically EBITDA pattern is basically on the economy comes to economy of scale also. So I will not be in a very good position to give you a guidance for.
Yeah, and also it is important to understand that this is a business where the prices influence the EBITDA significantly. So I think it will be prudent to not guide on what can be the price tomorrow of the maize and the finished product, and which is the combination which results in an EBITDA pattern. So what we can definitely guide is that we are going to grow our production and we will get operating leverage. And obviously, our EBITDA pattern relatively will improve, assuming that the prices which are standing today remain constant.
And with the addition of value-added products also.
Yeah, because in the time of higher maize prices, you have always increased the EBITDA pattern. Like from FY23, we say it was around 3100, now it is around 47. So I hope it is increased to 5000 something for this year.
So again, I want to reiterate so that the expectation is set right. EBITDA pattern is a function of the price prevailing in the market of the raw material and the finished product, which is not in our control. It is a function of our mix and our value added going up or going down, and it's a mix of the operating leverage. While the second and the third, we are very positively placed because our value add will increase and our operating leverage will come because of the size. But the first part, which is the prices of the raw material and the finished good, is not in anybody's control. Hence, we will refrain from giving a specific pattern EBITDA guidance.
Okay, no problem. So next question is on the finance cost. So sir, our debt has increased substantially, but our interest cost remains around 7.9 for this quarter. So what is the normalized net interest cost for FY27 you are expecting, considering all the Bihar subvention scheme, subvention interest that we get?
One thing I'd like to bring to your notice that the term loan debt, whichever we are taking for expansion of the capacity and setting up the factory and plant, is all subsidized by the Bihar government, the industrial policy, and we have been continuously getting the subsidies on time. So that is one of the reasons why the percentage, the term loan aspect, we will not be having too much, substantial increase in the interest obligations.
Yeah, I know, sir, but what is the number? Can you give the number for FY27? For interest cost, net interest cost.
Yes, interest cost will be
net of subvention.
Yeah, net that will be 14 PNL.
The CFO is giving you those numbers.
It should be around 39 to 40 crores.
For 27 crores. For
First quarter it is zero.
Sorry, for FY27, 40 crores now.
So if you see, it will remain more or less flat as compared to that of the FY26.
Okay. Sir, I would like to understand more on this subvention. So, you receive 100% subsidy of up to 20 crore of interest capping, right? In a loan, we can get up to 20 crore, not higher than that. So, sir, you must have exhausted this 20 crore, right? In the past also. So, yeah.
Yes. Sorry, sir. Please go ahead, sir. Please.
Yeah. So, you get 20 crore. So, my question is, are we drawing multiple loans for multiple capacity? Let's say for, one second.
Yes.
Let's say for the processing of 1650 tons that we did, we are drawing a different loan, and for the value added of liquid glucose, we get a different loan. So, our subsidy increase, let's say 40, 50, 60 crores. Am I right, sir? Because that's the
Yes,
only
sir,
way
you're
you
bang
can
on.
get these subsidies. Yeah.
You are bang on in this, that we are deriving different loans for different projects and different capacities. But now this 20 crore rupees has been amended to 40 crores. But we will not be
Okay.
able to, in 5 years, we have a scheme for 5 years, so we will not be able to, use the entire 20 crores or 22 crores maximum. So that 40 crores at the moment is not meaningful for us. But
When did this happen, sir? This 40 crore, when did this happen? This is
40 crores
positive,
happened last year. 50 crores happened last year, sometimes in last year means 25 in FY25 only. Sometimes in December, November or December, that amended policy had come, and we're still awaiting for the final policy from the Bihar government.
Okay. So, sir, it's really good, if as soon as this happen, you can update your presentation and, put out a press release also that
Yes.
this has happened.
Yes.
Yeah.
Because,
And, my last question.
So
Yeah, tell me, sir.
our old project of 825 tons liquid glucose MDP was registered under the old regime. It was done in 24. So we took it as 20 crores only. But now when it has started, now the government has said, no, we will go up to 40 crores also in the projects approved earlier also, whose production had not started. So we are waiting, but that is not yet cleared. So we have not mentioned that in our presentation because it is not cleared by the government yet. That 20 hoga hai, 40 hoga.
Okay. One last question, sir. So you said you are expected to do around 4 lakh metric ton. So we will utilize most of the capacity this year, right? So what is the trigger for FY28? I mean, your team met with, ministers, some minister in Karnataka for some capacity, right? So are you planning to, do capacity expansion in southern states, or what is the plan, sir, for FY28 and going forward?
It's too early for us to talk about another next expansion. We're just stabilizing this one, so we'll hold that on at this point.
Okay.
All
Thank
the
you, sir. That's all from me.
participants, please restrict your questions to 2, please.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead.
Yeah, thank you for taking my question. So, sir, just one clarification on the volume side. We did close to 5,000 additional volume in this quarter. So, what was the exact volume for the previous plant this quarter, and how much additional volume we did in this quarter? And I'm just trying to understand whether the last year volume was remain intact or there was some low.
Quarter 1, we have increased by about 5,500 tons. 5,500 tons, 8%. It was 64, and we have gone up to 65,000, 70,000 tons in quarter 1. In quarter 2, if all the things go well, and there are no, we don't have any issues in stabilizing and integration and everything. So we will go at about 110,000 tons in quarter 2. And if we're talking about the entire quarter year, we have taken a very restrictive approach of about not more than about 4 lakh tons. But let's see it. That should be the minimum which we should be having a 4 lakh tons. Which we hope to achieve.
Yeah. Understood. Understood. And sir, this additional 5,500 roughly, as we were planning that the new capacity would be largely focused on the value-added side. So, can we consider that this all new 5,500 was for the maltodextrin or dextrose side production, or
Yes.
it was?
Yes. Yes, sir. This was basically the entire capacity was used in liquid glucose and very small part of maltodextrin powder.
Okay. Okay. Got it. And sir, in terms of pricing for the starch side, could you help us to understand the trend from from Q4 FY26 to Q1 and how right now it's trading?
Sir, Q4 FY26 to Q1 FY27, the conversion, the net conversion rate between maize, that what you call value addition, between maize to starch has become better. Compared to that, it has become better.
But in terms of starch pricing, how has been the trend for that? I mean, any percentage we can indicate that how much percentage of price increase was there, or how much we have seen in Q1?
I have to calculate that, sir. I have not, from this last starch to this starch, that we will let you know about it. In due course, I'll tell my IR team to let you know about it. What is the percentage jump, but between the conversion.
Mr. Rohit, I would request you to rejoin the queue for a follow-up question. Ladies and gentlemen, I request you to limit your questions to 2 per participant. The next question is from the line of Omkar Kadam, an individual investor. Please go ahead.
Hello, am I audible?
Yes, sir, you're audible.
Yes, sir.
Yeah, my first question is regarding what is the revenue mix going to be between domestic and export market going forward? And do you have any targets?
So at the moment, the revenue mix is 10%, which was 5% in the last quarter. And of course, we are working on a lot of other opportunities of new markets for exports, which we are doing. My team has already visited. And again, we are attending fairs now, which is scheduled to happen September. I am also going personally to all those fairs. So I am very, very hopeful that it will increase. But a target and guidance will be difficult for me at this time. But I don't know how much will fructify. Of course, doubling has happened, so it should be more than that. But how much more till the time I don't get the orders and I'm not able to supply, I will not be knowing about it.
Okay. My next question is regarding, does management have any plans to turn co-products into higher margin products, going up the value chain?
So co-products, with co-products, turning co-products into high value-added products, there is a very thin possibility in which you can just go for a feed plant. But at this moment, this is a completely different line for us into getting into animal feed. So we have really not explored, okay, what is the situation, what is the margin, what is the value addition which we'll be getting.
Okay.
Thanks. Please stay on the line.
The next question is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
So thank you for the opportunity. Sir, firstly, I wanted to understand on our inventory. So as Bihar is a single crop or single harvest season, hello?
Yes.
Hello?
Please.
Yeah, sure.
Please go ahead.
Sorry. Yeah. So as Bihar is a single crop region versus 2 crops for some other geographies, so do we carry higher inventory or do we procure maize from some other states during Kharif season, if you could help us understand? And sir, this 208 day inventory that we have on our books, sir, is it sufficient to operate at the 75-80% utilization that we are expecting for the 1650 metric ton over the next 3 quarters?
So we, as a company policy, till FY26, we were basically procuring maximally about 90% or 95% inventory we used to procure during the Rabi season of April, May, June, July. And this year also we have procured at about, I would say, to about 80% of our inventory we have procured during the season of Rabi during April, May, June, July. And this time we are very small, about 10-15% we have kept to procure it from other states of Maharashtra, MP or Karnataka, where maize is abundantly available. And we now, Bihar also grows Rabi Kharif crop in certain pockets. So which we had never explored the past 6-7 years. Now we're exploring to buy those Rabi Kharif crop. Though it's not a big crop, it's about 6 lakh odd tons crop. So we are exploring that some parts, say about 10% of that or 5% of that, we will start exploring from the Kharif districts also of Bihar.
Got it. Sir, also, if you would help us understand what is there any low-cost advantage that we have versus industry leader? And sir, you mentioned that the maize to starch conversion rate is much better in FY27 versus FY26. So why is that? Is Bihar's crop superior to any other regions? Or if you could help us understand on that front.
No, sir. Bihar crop is the best crop in the country. Bihar and Karnataka, because the recovery of the finished products from that maize is very high, because Bihar ke basically jo dane hote hain maize ke, that are very large, काफी बड़े होते हैं. It's about 290 to 180 grams pieces numbers per 100 gram, whereas of different states which I mentioned are 350 400 grams. So recovery is much better, quality is much better. And what I told you about it, we are as a model, we procure a lot of major quantity of our requirement directly from farmers, which is of no logistics cost. These material come to our doorstep, FOR, including freight. And because Bihar doesn't have a very large inherent consumption of maize, अभी जो नए थोड़े बहुत plants और आए हैं वही हैं. So all this maize is sent outside Bihar to other states, other companies in other states. So we get at a much more cheaper rate.
Got it. Sir, just a final question from my end. Sir, considering the value-added products mix increasing this year, sir, what kind of EBITDA margin can we expect? And sir, this 80% inventory that we have procured, sir, what is the pricing per kg that we have procured this at?
Sir, the pricing of the inventory which we have procured, we have kept it in mind that when the Kharif crop comes during the November, December, January season, we will be competitive with our competitors. Basically, we will compete them with them. And regarding the EBITDA margin of course, the EBITDA margin, sir, will of course improve. That is what understood. They improve hoga. But what will happen? What will the modified starch of Catane or of carbon-methyl or of dextrose? क्या combination में लोग बेच पाएंगे? This is still we are exploring. So because a lot of these are also seasonal sometimes. Like liquid glucose is seasonal from September to March is the major time which we are able to sell. So that will only come out once we do the entire exact experience that we have of 1 year, then we'll be able to tell you better.
Mr. Madhur, I would request you to rejoin the queue for a follow-up question. Ladies and gentlemen, I request you to limit your questions to 2 per participant. The next question is from the line of Harsh Saraswat from Srujan Alpha Capital. Please go ahead.
Hello. Hi, good morning, sir. Am I audible?
Yes, sir.
Yeah.
Sir, I wanted to ask on the crushing volumes you would do for the FY27. I think you mentioned it in the call, I missed it.
Yeah. It should be above 4 lakh tons, sir.
4 lakh ton. Okay. And sir, on the maize prices, I wanted to ask, the last time when we had a con call, the prices of maize were around 20 rupees. Now it has, I think, jumped to 24, and it is almost, near the peak of 26, 27, which was it last year during the same period. So what kind of impact those prices can have on us? I remember industry was struggling at those prices.
So, if the maize prices, which you are saying 24 rupees, I'm still getting maize at my doorstep delivered at 22.5 or 23 at the most. A very, very good quality of maize, sweet quality at 23, first of all. And so, this maize prices, there's always have seen a trend in Bihar that the maize prices, I don't know what is the reason, but the maize prices goes up from September, which again starts softening down in October. So this was last year also, and this is happening this year also, and this has happened at earlier occasion, at earlier years also. So I don't see at all the maize prices going up very, very high, though we are holding a substantial good stock for the entire year. We are holding very, very good stock. So if it goes high also, we don't come into a question कि क्या होगा क्या नहीं होगा. It's not a concern for us. So if it goes high, of course, the prices of starch will go high. So we will be at a better situation for this year at least.
And sir, how are maize prices in India versus the world? Are exports still viable, or is there any change in that scenario?
So the maize prices, if you compare the maize prices to maize prices in the world, the maize prices are quite low compared to the Ukraine price, to the USA price and all. And the exports of starch worldwide is still very, very competitive. As per our calculation, the association's calculation, 24 rupees, 25 rupees tak ka maize, still the Indian exports will be very, very competitive.
Got it. So then in this year, what will be the peak debt for the company? And will it come in H1 balance sheet or it will be in H2?
Yeah, it is already peaking, and I think it will be in the H1 balance sheet, and H2 it will start again.
Yeah.
I think due to the inventory build-up.
Our working capital requirement is highest in the H1, so that's why the debt is peaking, and definitely it is going to come down when the H2 comes. So it will go down by that.
Basically, our old example has shown that our working capital requirement comes down to about 40%. Say for example, we have 100 crore rupees working capital debt, that comes down to 40 crore rupees by quarter 4.
Got it, sir. Sir, any capex plans for FY27?
Sir, at the moment we want to stabilize, because this is a very, very big expansion which we have done. So we want to consolidate and stabilize this, come to our experience of 90-95% capacity utilization, come to those figures, get into the entire value-added basket, market them at good prices, improve our results, decrease our debt, and then start thinking of, of course, plans are there, but then start thinking कि हाँ करना है कि नहीं करना है. But सोच तो चालू रखना पड़ेगा ना.
Got it, sir. Got it. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Surya Narayan from Sunidhi Securities. Please go ahead.
Hello. Am I audible?
Are you, sir?
Yes, sir.
Yeah. Hi. So thanks for opportunity and congrats for good set of numbers. So just to understand from your side that now what kind of production loss happened in the Q1. That is number one. Number two is that now what kind of the value-added products that has been introduced in the second phase of the capacity expansion, whether those capacities have been stabilized. If yes, then obviously then what is the kind of capacity utilization run rate currently going on in the Q2? And thirdly, as we understand that now globally the food prices are set to rise in FY20, CY27 to CY28. So, shall we understand that now the current high EBITDA margin, what the market perceives, is here to stay?
So, for the first of all, for the shutdown days, for the integration, we have lost at about 9 days for the integration of both the plants during April and May. So if we take about 800 tons a round off thing, so 9 days into 800 days, 7,200 tons we have lost in this. Talking about the value-added products, liquid glucose, one product which we are doing pretty. We have started now doing it about at 70% we have reached of the entire capacity, and this is again on the increase only. Maltodextrin powder, it is yet to, because maltodextrin powder, all these samples and everything has to go to a lot of places and the MNCs and all. So what customers we had, we are doing, we are catering to them, which we old customers. The new customers are yet to, we are developing it. Well, we have already developed, few orders have come, but maltodextrin should take about 2 to 3 months more to come to our target level. That is one thing. And what you spoke about, if the prices of, this is basically, I always tell everyone, this trade, this manufacturing and this trade of starch is not a trade which you will see percentage-wise. This is a trade of a whole number trade. Because if maize prices go up, starch prices will go up. If that comes down, starch prices come down. But your profit and your EBITDA, if everything goes okay, stays where it is. तो ये परसेंटेज के बेसिस पे आप नहीं कर पाएंगे. तो अगर नेक्स्ट ईयर इफ दी, फॉर एग्जांपल, द स्टार्च प्राइस गो अप टू 40 rupees, दैट डजंट मीन योर EBITDA will go up to 6,500 or 7,000 rupees. वैसा नहीं है.
So, regarding the value-added products, which among the products are the most margin accretive, be it dextrose anhydride or dextrose anhydride or hydrol? Which of the product have bigger potential so far as margin is concerned?
So margin is concerned, dextrose, our dextrose will we will see the light of the day by fourth quarter, but before March, in the fourth quarter basically. The maltodextrin powder, of course, is a higher margin as well as higher value addition also. But the quantity is less, whereas liquid glucose is giving 180 or 200 tons, maltodextrin powder will be 50 tons. So there, and the flurry of entire basket of modified starch, which we have already started trials, and which will be completely online within September. So those products are very, very high. But again, हर product के छोटे-छोटे requirement हैं. पूरा total करेंगे तो it will be quite a bit. But कोई में बहुत अच्छा 100% value addition है, कोई में 35-40% जो we are making at a small scale. तो ये सब मिला जुला के है सब.
So currently, looking at the current capacity utilizations levels and forcing the fourth quarter addition, so at what level you see the value addition products standing in FY28? I believe FY27 will be difficult for you to gauge, but FY28, what kind of percentage you are envisaging?
Sir, our capacity and everything which we have built up for value added and stuff is capacity shows at about 50-50. Starch 50% starch, 50% value addition.
So, but from a guidance point of view, I think you can take a 35% kind of
capacity. So automatically 35% हो जाता है. 35. So turnover automatically 35% हो जाता है. Total turnover. Yes.
So this year it will be standing somewhere around 20%?
Sir, let me not give you a complete figure or a guidance, but of course, from 3% we have already converted us to. It's likely, sir. It should be, sir. Likely it should be.
Okay, thank you, sir.
Thank you.
Thank you. The next question is from the line of Naveen, an individual investor. Please go ahead.
Yeah. Thank you for the opportunity. Hope I am audible.
So, थोड़ा सा आपका आवाज धीरे आ रहा है. little bit, if you can just increase the volume.
Is it better now?
Yeah, it's better now.
Yeah. So my question is, our share of value-added products is going to increase from 3, and previously we had guided to 25 this year. And what is the go-to-market strategy for the same? And what kind of investments will it involve?
So go-to-market strategy is we are making those products immediately at the moment. मतलब अभी जो हम लोग का चालू हो रहा है सितंबर तक कंप्लीट हो जाएगा वैल्यू एडेड के add-ons is the same circle. Most of them, I will not say 100%, about 80-90% of them, 80% of them are going into the current channel only. The dealers and the institutions, if you're making Catanic starch, we'll make a Catanic starch for all the paper mills which we supply native starch to, or oxidized starch again to those customers which we supply to our same customers, paper mills. For example, pre-gel starch. Pre-gel starch, food industry we're supplying, so we will be supplying to food industry. But again, this pre-gel starch is also in the commercial starch industry. For one usage is batteries, but that will be new for us, those things. So maximum of them, 70-80% are the old channel. Now, if we have 70% in our hand, developing another 20-30% will not be very difficult. For carboxymethyl starch, it's oil drilling. So that is only 20-30% of 20-30 tons of 1,000 tons of 1,100 tons of starch, which we'll be making in full capacity. So it is pretty good which we have. Or बाकी जो have new customers also for liquid glucose. I just don't want to throw the names on the thing, but we have acquired big customers, big MNCs, India's biggest MNCs, whom now we are supplying directly. We are billing them to them directly. वैसे हो जाएगा, we are not at all worried about that.
And so it won't involve any additional investment. So whatever the cost base, it won't increase from here.
The costing of liquid glucose कितना होगा मैट्रिक्स पर?
The cost base towards manpower or marketing team.
We have few additions. So this entire capitalization happened together as one project. If you want the breakup, I will let my IR team know, and they will give you the breakup के लिए value added में कितना हुआ है capacity तो दे देंगे आपको issue नहीं है.
And we were talking about some white labeling of some products. Is that on?
Yes, sir. It's completely on. White labeling, rather the white labeling base has increased. Few more customers have come in. The India-wide brand has come in, and the customers which we are doing earlier, they have increased their products. Both things have happened.
So there is cross-selling from existing customer and new customers also getting added.
Okay, understood, sir. Thank you for the opportunity.
Thanks.
Thank you. The next question is from the line of Prem Soni, an individual investor. Please go ahead.
Hello.
Yes, sir, you're audible. Please
yes,
go
hello.
ahead.
Hi, thanks for the opportunity. Sir, my question is on the EBITDA margins. Like everyone has already questioned the same, but like after expansion of value-added segment from 3% to 22% or so what would be the blended EBITDA margins considering, because in quarter F1 FY26 that was a 9.9% and FY27 quarter 1 that is 15.3%. So what would be the blended margin, EBITDA margin would we can expect?
I will take that, Sanjeev here. See, as we explained at length, the margins are is a culmination of three variables which we must remember. The first variable is the market prices of the maize as well as the finished product, which is not in our control. The second is the extent of value addition that we do on our products. So as the percentages increase of value add, our margins are obviously bound to increase. And the third is the scale. As we scale up our production, we will get operating leverage. Now, while the second and the third is happening, and we've already guided, that this year we will do about 4 lakh tons, and then we will do about 20% or whatever this year as far as the value add is concerned. The first is not in our control, hence to give a firm guidance on the per ton EBITDA or on the percentage of EBITDA margin is actually trying to gauge into something which is not fully in our control. Having said that, if you compare apple to apple from same price level to the same price level, obviously we'll do better than this because of the operating leverage and the value add. This is the best that I can explain you as far as the margins are concerned.
All right, sir. All right. Sir, can you give me the breakup on your marketing teams and sales teams? Since your employee count is 719, can you help me with the breakup of the marketing or sales team?
So that's a little detailed thing which you are asking. We don't have this at the moment ready with us, but it will be available with you with the IR team. So they will provide it. If you want it, they will provide it with you with the entire numbers.
Thank you. Due to time constraints, we take that as the last question. I would now like to hand the conference over to the management for the closing comments.
No. Thanks a lot, everybody, for joining in early in the morning. I really appreciate.
Thank you so much. Thanks a lot. Thanks a lot for your support.
And thank you, Arihant Capital, for hosting the call for us. Really appreciate that.
And for taking the time to join the call. And we sincerely appreciate your participation and continued interest in the company. Should you have any further questions or require any additional information, please feel free to get in touch with us. Thank you once again.
Thank you.
On behalf of Arihant Capital Markets Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.